Good evening, everyone. Time for another member update. Now you can see that the price of silver is testing below that $20 price. There's a lot of support at that price. You can see back here, even all the way back to 2008. It's really incredible that the price of silver is actually lower than it was at the beginning of the crisis when Bear Stearns began to collapse. But that's what we have, and that's what the manipulators have given us. I'm going to try to show you here that their fingerprints are all over this thing when we look at the latest Silver Institute report. So let's look at that. This is the latest report from the Silver Institute, and this is the silver market in 2013, and it was released November 12th. So let's just dig into some of the numbers here. They start off with silver prices, and we've already looked at that chart. Now I want you to keep an eye on this. This is the silver, gold, and base metal prices, and you can see that for the year silver is down 29%, gold is down 22%, copper is down 12%, lead is down 10%, and zinc is down 9%. So the first thing one would draw from that is that we would expect there to be less of these mined, and that's just normal supply and demand. Here's the price in different currencies. Of course, the big outlier here is the Indian rupee. Of course, that one is being rapidly devalued. And of course, we have the gold-silver ratio at a ridiculous 60-to-1, and we know why that is. And let's get down here into demand. Now, what they did is they gave you a 10-year difference here between the year 2003 and the year 2013. Now, you have to remember that these are percentages. They're not the raw numbers. But the big difference, of course, is going to be the shrinking amount of photography use, and that's down to 5%. There's a very large reduction in jewelry and silverware, which doesn't really make any sense to me, because you would think with silver being roughly equal with inflation, as low as it is right now, although back in 2003 the price was a quarter of what it is, you would still think there would be a decent amount of jewelry and silverware being made. But remember, these are just percentages. The big one here is investment. You can see that that's 24%, and then the hedging that's a wash. Now, this is the forecast of annual change. You can see that, and this is the difference between 2013 and 2012. These aren't totals, so there weren't just 17 million coins. There was a 17 million coin difference, and that's from the previous year. You can see jewelry and silverware as well, industrial up and photographic down. Now you can see the millions of ounces for silver bullion coin sales. These are by quarter, so you can see that we're very near the highs that we reached in 2010 and 2011. The North American number is actually at record highs. You can see that here. It's higher than when silver was approaching that $50 price, but the European sales are much, much lower. That may have to do with the VAT that they charge there. And we'll skip the jewelry and silverware demand, which is pretty much flat. The photovoltaic demand is down, and that I assume is due to the bust in solar, which has been a government-sponsored nightmare. And so we get the summary. Now the next we have is supply. You can see that the mine production makes up 77% of the supply, whereas it made up 68% of the supply 10 years ago. Government sales we know are nil because the government doesn't have any silver, and then scrap makes up the difference. It's surprising to me to see that scrap is still that large of a percentage with the prices being that low. And here's the forecast annual change. Now this is the big number I really want to look at and concentrate on. You can see that the forecast annual change is 27 million ounces. So the increase in mining is 27 million. The loss from scrap not coming in with low prices is 20 million. So that's a big difference. That's almost 50 million ounces. And the same thing we see here with world silver mine production. So the first thing that one would ask here is, why is primary silver mine production increasing? You can see it's at a record, and you can also see that there is a record for byproduct. In other words, silver mined as secondary, a byproduct of other base metals. And they're going to give us a list here of the base metals. I'm going to look at that, and then I'm going to go over and look at why that is. The other thing you want to look at here is this cash cost versus the silver price. You can see that the difference between the cash cost and supposedly the cash cost in 2010 was around $5 an ounce. Now, if you believe that, there's a bridge in Brooklyn I'd like to sell you. But you can see the difference there. They're showing that the cash cost is still rising. Of course, we would expect that to be the case with the cost of everything going up. But the difference has fallen by $10. So remember this figure here, $27 was the difference in 2011. And I wanted to get to that base metals. But that's not important. So let's go over and look at the base metal numbers. Now, I've pulled these before. These are the numbers from Kitco, and they're the base metal prices and the base metal stockpiles. So let's look at zinc first of all, because that one is the most dramatic. So when we click on this, you can see this is the 5-year zinc warehouse stock levels. Now you can see that they're up 6-fold from where they were in November of 2008. They're dropping some recently, but they're still very, very high. Whereas you can see that the spot price of zinc has pretty much been flat since that time. So that's going to tell you that for some reason they've been mining zinc and not selling it. In other words, they're not mining it because there's demand for it. That's why they're stockpiling it. But the price is staying flat. Now, if we look over at nickel, you can see that the situation is absolutely absurd, with the warehouse stock levels of nickel being 240,000 from a low of 6,000. You can see it's almost in a parabolic spike. So what one would expect from that is to see a change in the price. We would expect to see the price of nickel absolutely collapsing. It is falling, but it's not collapsing. And so let's go over and look at copper. Copper is not quite as dramatic as the others. You can see that the 5-year copper stocks levels, although they are still at near the highest they've ever been, they're down from that record high that they were. And you can see that the price of copper is still pretty much flat. So what one would have to conclude from this is that for some reason they're mining at the same amount or more, and they're not getting as much money. Now, why would they do that? Now, it's my contention that the reason that they're doing that is to actually get the silver. I don't believe that these companies are operated for a profit. In fact, I actually believe that these companies are all controlled by the Wall Street banks, and the only reason why they're doing what they're doing is to bring out secondary silver to be able to deliver it against COMEX contracts and not have the whole thing blow up on them. But let's dig further and see if that's the case. Now, this is the about statement for the Silver Institute about us. The Silver Institute is a non-profit international association that draws its membership from across the breadth of the silver industry. This includes leading silver mining houses, refiners, bullion suppliers, manufacturers of silver products, and wholesalers of silver investment products. Established in 1971, the Institute serves as the industry's voice in increasing public understanding of the many uses and values of silver. The goals of the Silver Institute are to encourage the development and uses of silver and silver products, help develop markets for silver and its products, foster research and development related to the present and prospective uses of silver, collect and publish statistics and other information about production, distribution, marketing, consumption, and uses of silver and silver products, spread knowledge and understanding of the uses of silver, and develop methods for improving the welfare of the silver industry. So, all noble goals. Now, let's look at the gentleman here. We have Fernando Lanas from Pinoles, and we have 3 gentlemen from Core Mining. If you remember, they changed their name this year from Coeur d'Alene Mining to Core Mining. We've got Mitchell Krebs, Ken Koski, and Thomas Angelos. And then we've got this Dirienzo from the Silver Institute. So let's go over and look at Core Mining, since this is going to be the key player here. The first thing that really stands out here is the incredibly horrible price performance of their stock. You can see that this is a company in big trouble, and if we look at the market cap, you can see the market cap of this company is $1 billion. That's all. That's the entire market cap of Core Mining. Now, if you remember, I showed you that differential between the cash cost and the price. So if you remember, back in 2011 and for a good part of 2010, the price of silver was $30, $35, $40. You can see that $27 differential between the supposed cash cost and the average price. So one would expect that a company engaged in mining this with this tremendous opportunity for profit would be very profitable. So that was the year 2011. Now let's go over and look at Core Mining's stock. You can see that the stock had a high of about $34 in March of 2011 and fell to about 17, came up to 30, and is now down around $10. So what kind of company is it that can't make a decent profit when they have a $27 spread between their cash costs and the price of silver? That's a very interesting question. A more interesting question than that is, why is it that the price of Coeur d'Alene Mines was $232 a share back in 1996? It was all the way up to $267 in 1990. Now, if you follow the price of silver like I have, you know that the price of silver was pretty much flat during the 90s. We're talking around $5 an ounce and going sideways for many, many years at about that price. And you can see that the price of this stock was very, very high. So how was it that this company was able to make such a profit mining silver back when silver was $5 an ounce, and yet today the price of the stock is headed towards zero, and it's a company with a market cap of only $1 billion. With a stock price of about $250, we'll just say $250, that means that the market cap of this company back then was 25 times what it is today, or $25 billion. So it seems to me very clear that the people who are running this company are not so much interested in the profitability of the company or the price of the stock, i.e. their shareholders, but they seem to be interested in something else. Now, let's look at the gentleman that runs Core Mining. This is the 41-year-old CEO who made $2.2 million in fiscal year 2012. Mr. Mitchell J. Krebs, also known as Mitch, has been the president and chief executive officer of Core Mining since July 12, 2011. Mr. Krebs served as the chief financial officer of Core Mining Inc. from March 21st, well, that's an interesting date, 2008 to July 12th, 2011. He served as Senior Vice President of Core Mining Inc. from March 21st, 2008 to July 2011. Previously, he served as Treasurer and Principal Accounting Officer of Core Mining Inc. He spent several years in the investment banking industry in New York. He served as Senior Vice President of Corporate Development of Core Mining from May 2006 to 2008, Vice President of Corporate Development, etc. Mr. Krebs served as an independent consultant since September 2001. He served as president of Mine Depot Inc. from May 2000 to August 2001. He served as an associate with Allied Capital Corporation, and that's a Chicago corporation. He served as manager, etc. He studied with a BS in economics from Wharton School and University of Pennsylvania, and has an MBA from Harvard University. So Mr. Krebs is doing very well for himself, taking about $2.5 million a year out of a $1 billion market cap company. Of course, his shareholders aren't doing nearly as well, as you can see by the stock price and the market cap. So it seems to me that if the Silver Institute is interested in promoting the uses of silver and educating the public about the value of silver, why is it that the people who run the companies that are involved with silver can't seem to make a profit? It may just be the case that these people are running these companies for the purpose of suppressing the price of silver rather than making a profit off of silver. So very interesting numbers from the Silver Institute. Of course, I trust them about as far as I can throw them. We've got the silver ETF holdings, and I've covered this many times before. One would have to ask, where did all this silver come from? And you certainly can't find all that silver in the previous years of this Silver Institute report. So they give their projection, and that's going to be a very conservative projection, that silver is going to rise to roughly $24, or it's going to average $24 this year. And the short-term forecast is that through the end of the year it will trade between $20 and $23.70. Well, it looks like we're below that right here at 19.86. So it's my conclusion that just like the stock market, just like the bond market, just like all of the other markets, there are players who are operating behind the scenes. These are no longer free markets. The purpose of these companies, and by the way, the other company here is Panoli, and they only have a market cap of about $9 billion, $10 billion, and they're down more than 50% from the high. So it's my contention that the people that are running these companies, and I think I've shown that by showing you that the stockpiles of the base metals continue to rise, yet they continue to mine more of them at a loss, and that's the reason they're able to mine more silver every year. Basic supply and demand would tell you that with the price of silver down over 50% from the high, where they still were unable to make a profit, that there would be no economical reason for them to be mining more silver this year than last, and that year before the year before that, and on and on and on. They're mining more silver every year because it's my contention they're operating at the behest of the bankers, and the bankers want them to mine enough silver to keep the COMEX from blowing up. They really don't care how much base metal they have to stockpile. The order has been given: mine enough silver to keep the COMEX alive and until the entire system blows up. And we'll talk to you next time.